Zimbabwe experienced hyperinflation in the late 2000s. I was curious about how it happened and how it impacted the national economy. This time, I reached out to my friend, Mr. Same, a CFA charter holder in Zimbabwe. He's now a director at UPro Contract and also a director at Leon Holdings. He has spent a lot of time in the finance industry. He began his career at a brokerage firm as an analyst before joining the investment firm. Before the interview, he showed me the famous 100 trillion Zimbabwean dollar bill, which has 14 zeros. Nowadays, his printed bills are traded on eBay about somewhere around US dollar 200. Actually, he was one of the first to receive the bill at the time. Back then, he could not use the 100 trillion dollar bill as the shop did not accept it. Instead, he used a 10 trillion dollar bill to buy a bread. The discussion topics include the background and consequences of the hyperinflation, the current economic status of Zimbabwe, and implication for Japan. I found the discussion to be quite insightful. After completing the interview, I realized how a country with the natural resources like Zimbabwe has become economically and socially exhausted due to the government's misguided policies. Additionally, the inflation that occurred was just a consequence and the background of the government debt and the chronic deficit had already become apparent years earlier than the hyperinflation. I'm a Japanese. Many people may feel that hyperinflation could never happen there. However, considering the similarities, such as escalating government debt and a persistent trade deficit, I suggest that we take Zimbabwe's case as a lesson to learn. Thanks for the help for the interview. I heard that the Zimbabwe economy has a quite big, famous hyperinflation back in late 2000s, and then I want to have an interview on what went on and then what had happened in economy and so forth. Let's start with the kind of background type of information. I checked with the internet that there's some political things and land reform and government deficit. Could you explain what went on from the overview and then what had happened?
Thank you so much, Hashi. This is quite an interesting conversation. And what makes it interesting is like we are looking back into history. And obviously at that point, I was a participant. I was in the Zimbabwean economy. I was in the country. And obviously a lot of things didn't register in our minds as they were happening. But when you look back, obviously there are quite a number of lessons for Zimbabweans and as well as many people right across the world, what we could learn from what happened. I'm not speaking as an economist, but as someone who was in the economy and who has an appreciation of what happens in economics. So as a bit of background to what happened.
You were in a finance job at that time, I recollect, right?
Yes, I was an analyst when all this was actually happening. So as a bit of background, I had just graduated from university in 2007 and landed my first job as an analyst or as a financial analyst for a stockbroking company. The company was into stockbroking and also had a merchant bank. It was called Interfin at that time. And I think 2007 and 2008 will stand out as perhaps the worst period in the hyperinflationary, in the history of Zimbabwe's hyperinflation.
Yeah.
And all these things were happening at a time when I was actually starting my career as a financial analyst. Yeah.
Quite tough luck.
Yeah, it was also quite interesting anyway. It wasn't an easy thing being an analyst working in a hyperinflationary environment because one of your jobs is to forecast earnings, and to do that, you do rely on historical numbers, which were pretty much useless and couldn't even help you. And we're talking about inflation hitting about 231 million% by June 2008. And beyond that, you couldn't even focus. So you can imagine what it meant to be a financial analyst and still being able to do a reliable earnings focused and be able to advise your investors on what stocks to pick and what's happening in the economy. So there were lots of challenges as far as the job is actually concerned.
But I heard that as a brokerage company, so I heard that the Zimbabwean people, when the inflation starts, people are buying equities at that time. So in terms of the stock brokerage business, I may guess that may not be bad in terms of business. No.
The challenges were there. So obviously, for anyone who was directly involved in the market, there was a slight advantage, but at the end of the day, your earnings were still worthless for one reason. Settlement wasn't instant. We had T+7 settlement cycle at that point. So it meant that, yes, you could, and Zimbabwean trading was still manual. We had what we called 2 callovers. They would trade in the morning and then trade in the afternoon. So it was very possible to buy shares in the morning and then sell them in the afternoon, but for a profit. But the problem was you still had to wait for 7 days for settlement to happen. And I can tell you that all your returns could be wiped in those 7 days. It was pretty, yes, it was enough. But perhaps before we get into the actual issues, you had asked a question about the background to this hyperinflation, which perhaps we should spend a bit of time on that. So the actual hyperinflation, I think it was in the period from around 2003, 2004. And then that ended, I think, I would say, end of 2008, perhaps officially early 2009. What led us to that, I think you did touch on a few issues that had happened, which is the land reform that actually happened around 1999. And prior to that, I think Zimbabwe was also involved in the DRC war. There was war in the Democratic Republic of Congo. And Zimbabwe, it's estimated that they might have spent $1 billion then participating in this war. At that point, they were supporting the DRC government. And for a small economy like Zimbabwe, spending $1 billion fighting a foreign war was not really the best decision. And I guess that's perhaps forms the background of our problems and what led us into hyperinflation. So you were seeing all these excesses in terms of government expenditure, funding a war around 1995, 1996 in DRC. And then after that, they also spent quite a fortune compensating former freedom fighters who had fought a war that ended in 1980. And obviously there was growing discontentment among these freedom fighters, perhaps more than 15 years after independence. They felt like they hadn't really benefited that much. So the government took a decision to pay each one of them 50,000 Zimbabwean dollars at that point. It was still a good currency, not a very good currency. So they made a decision to pay each one of them $50,000. I think it was around 1995, 1996. And that was not budgeted for. That was not budgeted for. And it ran into millions, if not billions, of Zimbabwean dollars at the point. So it was not budgeted for. And there's war that's happening in DRC. And in 1999, we then had the land reform, which was not an orderly process. It was literally grabbing land, and that destroyed the agricultural industry. It had huge repercussions. And for a Southern African country, you will appreciate that agriculture is very much fundamental, very much central to what happens in the economy. It was a big contributor, perhaps upwards of 20% in terms of its contribution to GDP. So we were actually destroying an industry that was helping the economy in two ways. Food security, so we didn't need to buy food. We didn't need to import food as a country. We were producing enough food for the country. And we were also exporting. So Zimbabwe exports tobacco. I think it's a tobacco producing nation. It does produce a very good grade of tobacco, and that ends the country foreign currency. So you're destroying that. So it means you have reduced your ability to generate foreign currency for the economy, which is much needed. And you're also no longer food secure. And in addition to that, thousands, if not millions of jobs were destroyed. Hundreds of thousands of jobs were also destroyed in the industry.
Yeah, I read in the articles like land reform was one of the core trigger. I initially thought that was kind of privatization of the ownership transfer of for those the previous owners. But and it's the first time to hear that that can devastate the kind of the productivity. Interesting.
It was not an orderly process at all. Some people would call it land invasion, in the sense that there wasn't a clear way of transferring rights from the previous owners, who were predominantly white, who were doing agriculture, owning large-scale farms that were producing cash crops that employed hundreds of thousands of Zimbabweans in those farms, low income sort of jobs. And the transition wasn't orderly. It was a group of people, mostly were politically connected, identifying a farm, and then telling the owners to leave the farm, and then occupying it instantly without knowledge of what actually happened. And up to today, I can tell you that the government is faced with a bill that runs into billions, which is meant to compensate these former commercial farmers who are mostly white and of the Rhodesian sort of from the Rhodesian times. And they still have that bill the government has to settle at some point, and they have sort of acknowledged that there is a liability. So it was land grabbing. We're using the term land reform, but in actual reality, it was a land grab.
Okay, gotcha. That makes the huge government deficit, I guess. So, and then
It did affect the government in the ways I have sort of presented. It did kill an industry that was earning the country huge amounts of foreign currency, because we were exporting tobacco, we're producing cotton, and many other crops. We're also food sufficient as a country. We're producing a lot of maize, so we didn't need to import food for the country. And thousands of people were employed in agriculture as laborers. And that simply means it also helped the economy in many ways in terms of keeping people employed and reducing unemployment. So it wasn't by engaging in the land reform, the violent land reform, we were not doing ourselves a favor at all.
I see. So that.
And there were downstream effects to that as well. So, for example, the industry we had food processing, we had manufacturing, clothing industry. Those industries relied on agriculture for inputs. So there were downstream effects as well, because your food manufacturer can no longer source inputs locally. So you need soybean to make cooking oil, and you're no longer producing adequate soybean or sunflower for cooking oil manufacturing. So you're already affecting your industry as well. So industries that were directly linked with agriculture also suffered. So you're also affecting those industries that benefit from agriculture. So you're looking at the downstream effect. And cigarette manufacturing as well. You're producing tobacco. We would also do a bit of beneficiation, manufacture cigarettes, and that's also being affected. But there's also something that we might also miss when we look at the effects of destroying agriculture. We had a vibrant banking system that had finance houses, and your finance houses were providing lease financing to commercial farmers. So a farmer who wants a combined harvester would approach a finance house or a bank for funding. So it simply means when we invaded the farms, when we took over the farms, those loans could not be serviced. So the banking industry is also being affected, yes, because the new owner has no knowledge and has no intention to carry on with servicing. So this is an industry, and a lot of other industries were linked to agriculture. And so the banking industry did suffer. And the banking industry was handling accounts for exporters, farmers who were producing for export. And that inflow is no longer coming through the bank. We had estates, well-established estates that were exporting beef into the EU, that were exporting flowers every day into the EU. And those estates, for example, Kondozi, we just woke up one day and Kondozi is not there anymore. So employment has been lost. Kondozi had facilities with local banks. And
What's Kondozi?
Kondozi was an estate that was a horticultural estate that was producing flowers and a number of products that were being exported into the EU. So you wake up one day, it has new owners, people have taken over the land, and all those banking facilities can no longer be serviced. And the banks have to write off, and the foreign currency is no longer flowing through. So it was a lot of damage, and that's why we like to talk about the mistakes we made in agriculture. But it's not the only thing. I think when we get into the background, we also made similar mistakes in other industries. So, for example, mining. Mining was also affected. And obviously, we'll discuss this later on because the government had to come up with certain policies to intervene. And most of them didn't bring the desired output or the desired result. So mining also was a victim. And you look at industries like tourism, it was also affected. So the whole publicity, negative publicity of, Zimbabweans grabbing firms and funds, and at some point leading to casualties or to death, because it was violent in some instances. And that picture now being broadcasted to the rest of the world had an impact. Your tourist immediately blacklisted Zimbabwe as a destination. So we had lots of tourism was such a vibrant industry, but because of the land reform again, which was very violent, you then had tourists blacklisting Zimbabwe as a destination, deciding not to actually visit the country.
Yeah, I record. I saw there's a beautiful fall in Zimbabwe. That's a tourist destination.
Yes, I mean we have the falls, a lot of safari that happens, beautiful scenery in the Eastern Highlands. And tourism was quite vibrant and quite developed. And at that point, it did suffer from the image because the perception and the image of the country right across the world was not favorable. So we then had to see a decline in tourism inflows and number of visitors visiting the country.
It looks to me that economic crisis is a huge crisis, from agriculture to tourism that has already been there before the famous hyperinflation.
Sorry, I didn't get that.
So it sounds to me because of land reform and those social unrest, the serious economic problem will indeed exist before the famous hyperinflation 2008-9 those periods.
Yes, very true. So this is just the background because you don't just wake up in hyperinflation. There has to be a background. And the background is we had these disastrous policies over the years, starting from the 90s or mid-90s, and then going into the early 2000s. So we were having a series of disastrous policies being undertaken by the government of Zimbabwe. And with those policies, the effect was we destroyed industry. So we spoke about tourism, we spoke about manufacturing, we spoke about agriculture, we spoke about mining. And as you're destroying industry, it's affecting you in many ways. It's affecting the economy in many ways. Zimbabwe was exporting, and we were exporting and we were earning foreign currency. So exporting from agriculture, exporting from mining, and exporting from finished and semi-finished products, and also getting tourist influence. So once you cut that, it simply means the country is no longer earning as much foreign currency as it needs because Zim does import. We do import quite a number of other things for the manufacturing industry, consumer goods, and quite a number of other things, including fuel. So the foreign currency is no longer there. So that will explain why we ended up in hyperinflation because now the government could no longer source enough foreign currency to meet its own needs. And the things that they then did, which was trying to print and actively participating in the black market, trying to get the foreign currency to meet their own needs, which just fueled more hyperinflation. So they were a series of bad policies prior to the actual hyperinflation. And those policies then led us to a lot of intervention policies. And by intervention policies, even the central bank was engaged in what they call quasi-fiscal. I'm not so sure if I'm preempting, but they were engaged in what they call quasi-fiscal activities. The central bank was actively trying to help the industry, coming up with policies and disbursing funds directly. So they did what they call the farm mechanization program. And with the farm mechanization program, the central bank procured equipment for farmers, but the federal bank is not the right person to be doing that. So they funded procurement of equipment, and the idea was if we do that, we'll be able to help agriculture. They came up with programs like BACOSI, BACOSSI, which you can check on the internet, and they had initiatives like ASPEF, ASPEF. All these initiatives were happening under the central bank, and we call them quasi-fiscal activities. And with these initiatives, effectively, they were printing money. They were printing money with the hope that if we help the industry, then there will be a desired output. We can sort of stimulate production, which had declined because of the things we spoke about.
So the central bank itself is printing money itself is quite common in this.
It was printing money. So according to Steve Hunk, I think if you read his paper from hyperinflation to growth in 2008, he claims that the Central Bank of Zimbabwe, the Reserve Bank of Zimbabwe, issued currency at a rate that exceeded German central bank. So the Reserve Bank of Zimbabwe between January 2005 and May 2007 issued currency at a rate that exceeded that of German central bank from January 1921 to May 1923 at the brink of German's hyperinflationary episode. That was the central bank.
So it sounds to me that central bank does not, is not perfectly. Central bank is not independent, but also not keeping the preventing inflation. That two mechanism is not working there.
Very true, Hashim. You have actually done a proper diagnosis of the problem. So the first thing is our central bank is not autonomous by any measure. So it's not independent, like what you're saying. Even up to today, they're not independent. They operate at the mercy of politicians, directly at the mercy of politicians, to a point where the president himself can direct or issue a directive in terms of what's going to happen at the central bank. So that has not changed. They are not independent, and they were not sticking to the basic mandate of a central bank elsewhere in the world. And they were not even focusing on their basic mandate at all, which is perhaps inflation targeting and doing that using perhaps two most important tools, which is money supply and interest rate. That was since lost. And up to today, we still have the same problem in Zimbabwe because the central bank is not autonomous. So it is key to have an autonomous central bank and that focuses on its mandate. Without that, you're bound to end up with the same problems we had because politicians have their own interest and they need sort of checks and balances to keep a country or the monetary systems to keep it in a healthy state. So the central bank must be autonomous. They must have their own mandate, which was not the case in Zimbabwe. Our central bank was actually involved in quasi-fiscal activities. But without that, so assuming the central bank was not doing that, we're still bound to end up in hyperinflation. Why? The government was already spending more than what it could afford. So there was a lot of excesses and we were spending more than we were making. And at some point, there would have been need to sort of monetize that deficit. And it would still lead to hyperinflation. But for Zim, it was two-pronged. The government was doing whatever it was doing on the fiscal side, and the books were not balancing. We were spending more there. And the central bank was now carrying out quasi-fiscal activities. So it's double-pronged.
Oh, wow.
Which explains what was happening in Zim and why it was so disastrous.
I think you mentioned before that, the IMF or the World Bank is not the caring at all, compared to the one, happened in Korea in 1997, or some of the developed countries having those fiscal problems. Then, international institutions not coming to the Zimbabwe case, I think.
So it's not entirely true, or I would say I think it's also understanding where they were coming from. It's not entirely true that they neglected Zim. I think the IMF and the World Bank, especially the IMF, have always been there making recommendations. But I think those recommendations were falling on deaf ears. So the first thing is you can't just expect the IMF to bail you out. The bailout comes with conditions. And you have to do A, B, C, and D. And Zimbabwe would not really sort of do its part in terms of carrying out the recommendations in terms of fiscal adjustment, what the government needed to do. In the early 90s, Zimbabwe used to work with these institutions. We used to closely work with these institutions. And that sort of brought in a bit of discipline. And that's why we talk about the 90s being perhaps our glorious years, because we were working with these institutions. And then at some point, we just stopped. And we sort of acquired a pariah status with the land reform. And obviously, these institutions had to show that they're not for what we were doing. They were not supporting what we were doing. And with the land reform, which was not accepted, and they knew that with such disastrous policies, we were bound to end up with bigger problems. So we were not listening to them, and the monetary support sort of stopped coming, and Zimbabwe was in arrears, was in default. It wasn't servicing its loans, and not just to IMF and World Bank, but also to other sort of creditors, including the Chinese government or institutions. We sort of stopped servicing those loans. So you can't expect to benefit from these institutions when you're not doing your part. So yes, I think we no longer had budgetary support from these multilateral lending institutions. And for that reason, we then had to deal with the problem locally without sort of external support. But I must mention that we would get support in terms of donor aid. I think we still continue to benefit from that, but not enough to sort of provide support to our fiscal requirements. So yes, indeed, there was absence of support, and for a good reason.
I see. It's quite understandable. So then inflation happens. Sounds to me really inevitable as of the 2007-8 already. So and then
you're very right, Hashi. It became very much inevitable considering the cocktail of bad policies we had prior to that. So you're looking at industry that's in a decline. So capacity utilization was very low right across. So productivity had come down. We were not producing as much. And we had to, obviously, unemployment began to rise significantly over the same period. So people are no longer employed. And our GDP, I think Zimbabwe had a GDP decline that was worse than a country at war. So if you compare Zimbabwe to Cote d'Ivoire, DRC, Sierra Leone, you realize that we had a GDP decline of minus 34% between 1999 to 2004. It was a GDP decline of 34% between 1999 and 2004. You compare that to Sierra Leone, 1996 to 1999, they had a GDP decline of 25%. DRC between 1996 and 2001 had a GDP decline of 19%. Cote d'Ivoire between 1999 and 2003 had a GDP decline of just 7%. So Cote d'Ivoire, DRC, and Sierra Leone were countries at war. And Zim was declining faster than those countries.
Wow.
So your GDP is declining. And that has that has significant implications. So it also means the tax base was actually coming off. The government relies on taxing, and the economy is not growing, but it's actually shrinking. So it simply meant that the government was not getting enough inflows.
But
here's the deficits that we're talking about.
Just want to know what the taxation system is the same as a combination of income tax and then corporate tax, or maybe consumption tax if possible.
Yes, it's a combination of all of those. So we do have income tax, and we also have consumption-based taxation, which is your VAT, if I'm correct on that one. And also we do have corporate tax.
But I thought about the question laterwards, but it's I can ask now. So if for example, in the inflation scenario, if the income tax, especially if the income tax is kind of the multiple layers, so more higher income, the taxation rate is much higher. So if in the inflation scenario, it's easy to get hit the hardest tax rate for everybody. Won't that be happen?
So as explained before, you had a scenario where people were actually becoming unemployed. So factories were closing down, industries were closing down. Your agriculture has sort of shed thousands of jobs, hundreds of thousands of jobs are gone. The biggest employer became the government. So that became the largest employer. Your mining industry, I think, if I can shed a bit of light what was happening in the mining industry. So you had the big mining companies going under your care and sort of maintenance schemes. And obviously, there were other factors that affected the mining industry, and mostly were to do with the monetary policy by the central bank. They had what they called retention schemes, where the central bank would take a portion of all export proceeds, and then they would be liquidated at an official exchange rate, which was not market determined. So the official exchange rate was way low. So a good example is you export and you get an inflow of $100. This is hard currency. The central bank had a retention scheme where they'll take a portion of that. I don't remember the exact numbers, but let's assume they're taking 50% of that. So they would liquidate $50 of your money at the official exchange rate. So the other $50, you get it as hard currency, and then the other $50, you get it as a local currency, because the forced retention was meant to beef up the government's sort of forex reserves.
So effectively, they use the exchange rate as using.
But that's not the full story, Hashi. So they would then give you the local currency, but which was not at it was at the official exchange rate, which was much lower than the prevailing exchange rate in the black market, which I would like to think was the correct exchange rate. So that's already, you're getting less and less from your exports, which then would make it very difficult for the mining companies to continue in business. That's one aspect of it. And then the balance, which was retained at 50 as US dollars for the mining companies, the central bank ended up taking all those balances as well. So around 2008, the mining industry had shrunk, and most companies have sort of shut down their operations. And the central bank was owing plus or minus $30 million. I mean, this is an industry that was exporting billions, and they then had to go for the amount that was supposed to be utilized by the mining companies. So government has taken its share from the retention scheme. They went on to take the balance, and they defaulted on this balance. So they never paid them out to the mining companies. So it became almost impossible for companies to remain viable. So that's what affected the mining industry. It was a very difficult situation for them to operate, where you had retention schemes, and not just the retention schemes, they would even go for the balance after forcing you to convert part of your proceeds into local currency. And in addition to that, there was now discussions around indigenization of the economy around that time. So with indigenization of the economy, they were going to force these mining companies, which were largely foreign owned, to give up 51% of their shareholding to locals. And with talk of that, it simply meant that most mining companies were not keen on reinvesting in Zimbabwe or bringing in new capital to expand their operations.
Mm.
And it's not surprising, by November 2008, Metal and Gold, which was the largest mining concern at that point, shut down. Whilst Bindura Nickel, which was the largest nickel producing company, decided to just go under a care and maintenance scheme. So your actual mining production output actually went down quite significantly. And we're talking about asbestos production. We're producing asbestos at the time, copper production, gold production, iron ore, and a number of sort of minerals, including phosphate and palladium and all that, and nickel. So all those minerals registered a sharp decline. And I'm just talking about in the 2 years, that's 2007, 2008, we had already declined. And by that time, I think we had declined by huge percentages. And just looking at 2007 and 2008 data, there was further decline. So it was no longer viable to be in mining. Yet mining was one of the largest foreign currency earners for the Zimbabwean economy.
They killed the economy, killed the foreign currency.
They literally killed it. It was literally killed. So that was coming from a number of factors that we spoke about. You're talking about indigenization, which is literally forcing mining companies to have local shareholders who did not, most of them wouldn't have capacity to capitalize these mining companies. And you're talking about bad policies where the central bank is retaining part of their proceeds. And a number of other factors. Obviously, you talk about power issues. I would like to believe that at that point, we were also grappling with power supply, energy crisis. We didn't have sufficient electricity to power these companies. So already it's becoming unviable from a number of fronts. And most companies just decided to close down.
I see.
So that's as far as mining is concerned.
I guess the Zimbabwe economy nowadays should be operating normally, especially the mining sector should earn a big money, given the current market, gold and copper.
I wouldn't say that, because what will surprise you is to know that we now have retention schemes again, because the economy has been struggling. And if you've been following through, I think just a few weeks back, they have introduced a new currency. It's because the Zimbabwean dollar had lost a lot of value, I think losing more than 70% of its value in less than 3 months. And so as far as the local currency is concerned, we're in hyperinflation again. And this would be the third episode of hyperinflation since
not
2007, 2008. Yes, it will be the third episode of hyperinflation. So we haven't really learned much from our history. And what's really sad is the same things we're talking about today, we're repeating exactly the same mistakes. So we do have foreign currency retention schemes back at the central bank. And we're still talking about an energy crisis. We're still struggling to generate enough electricity to power our homes and the industry. And we also can't reinvest in these companies. There isn't much capital that's being deployed in the mining industry because the country risk is still very high, and investors have a lot of concern as far as the Zimbabwean economy is concerned.
I thought about raising this topic later, but let me ask a question about China. I think they are you mentioned one of the few, the last lenders to the country's economy. So it's together with the China's national policy, and then it's quite makes sense to give them the infrastructure to build their own, or to give them kind of I think that's a renewable energy is one of the the newest topics for them. So wondering, for energy crisis or the funding crisis, I guess China is working on to some extent.
Look, there has been a lot of investment from China, and considering that since the early 2000s, we haven't had a lot of interest from Western investors. I think the Chinese have sort of stepped in, and they've been perhaps the dominant investor in Zimbabwean infrastructure. Most of their investment is infrastructure related. And we have also seen Chinese investors showing interest or actually investing in the mining industry and a bit of agriculture. But as far as the Chinese government is concerned, I think their investments have been more or less infrastructure related. So they have been involved in the electricity expansion of our hydro electric plant at Kariba. I think they did expand that. I think they did increase the capacity of that plant, and they've also been involved in the refurbishment of our coal plant, of our thermal electric power plant, which is Wange. I think they did a refurbishment. It was very old, and the new equipment was put into that. And outside of that, I think they've also been involved in other sort of government projects, whether to do with dams, construction of dams, and also the new parliament building. I think it was a donation from the Chinese government. So they've been more or less involved in those areas. But the problem which comes with that is, so in the absence of a competitive bidding process for these projects, who knows, we could be paying more than what we should be paying for these projects. And Zimbabwe having a history of defaulting on its creditors. We have a history of not paying our loans. It's very possible that we might be getting these loans slightly priced above coming at a high interest rate, slightly punitive for a country that doesn't pay its loans. And it's very possible that we have also been defaulting on those Chinese loans, because I think we have a history of not honoring our obligations. And so it's still quite a number of issues with the Chinese investment in Zimbabwe. But I must say they are the only ones who are really keen on that. In agriculture, they've been investing in tobacco. And I would like to believe that we're exporting our tobacco, a lot of our tobacco into China. So private Chinese investors are investing in the tobacco value chain. That's a cash crop. And with a very short turnaround, it's one season, and then the next year you're cashing out. So they've been investing in areas to do with that.
Interesting.
But the question still comes, I think, with the infrastructure project. I think we still have questions to do with the pricing of those loans and those contracts, because we haven't been going through competitive bidding processes for these mega projects.
Understood. Oh, that's quite realistic, but it's understandable.
Yeah. So I'm not too sure whether we have done a bit of justice on the various industries and how it then drove us to hyperinflation. We spoke about your mining, we spoke about agriculture, we spoke about tourism, declining number of visitors every year, and obviously the image was battered, and that was obviously forcing countries to put us on the blacklist, and tourists were not prioritizing the Zim destination anymore. And then we spoke about manufacturing, how it was also affected. Obviously, it was linked to agriculture as well, because some of the inputs were coming from agriculture. And when you look at all these things, it simply meant that we were not getting enough foreign inflows. And that simply meant that it was now becoming very difficult for us to import. So we're now importing food. We import oil, which is fuel, and we also need to service our loans. So I think one of the things that happened during this time is we actually started defaulting on our loans as a country. We're no longer servicing those loans. So it also meant that we couldn't attract some reasonably priced financing for whatever purpose, because we were defaulting. And so when you add all these things, it simply meant that on the issue of foreign currency, we're not getting enough foreign currency. And that was also very key in Zimbabwe's hyperinflation, in the development of our hyperinflation. We now had to chase the forex. And to do that, the government was actively participating in the black market. So the central bank would print money and then try to mop up forex from the black market. So which fueled further inflation. it's unheard of, but that's what was actually now happening. Government trying to buy foreign currency from the black market. And we can also talk about inflation linked to exchange rate weaknesses. I think at some point we had, I think by November 2008, our exchange rate was 1 quadrillion. So $1 was exchanging for 1 quadrillion Zimbabwean dollars. That's in November 2008.
Yeah.
And just bear in mind, that's after knocking off 9 zeros. We had redenominated twice prior to this. And so you would add 9 zeros to the quadrillion. It's perhaps a number that I can't actually.
A literal explanation.
Yes. So at some point, the Zim dollar was just worthless. Against the US dollar, you needed 1 quadrillion Zimbabwean dollars in November 2008, just going one US dollar.
Yeah.
And the central bank kept on printing so that they could mop up US dollars on the black market. Because there was nothing flowing through. There was very little flowing through the formal channels, which is banking, because of the disparity between the official exchange rate and the black market exchange rate. So it wasn't liberalized. The government would fix the exchange rate. At some point, it was a managed float, but it wasn't based on fundamentals. So for that reason, the black market became the de facto market for foreign currency. So companies were now going on the black market to meet their own requirements. You couldn't go to a bank. And the same with the central bank buying on behalf of the Zimbabwean government so that we could import fuel and meet a number of our other foreign currency requirements. So that's sort of what drove the hyperinflation to very much insane levels, to levels that we had never seen before.
I guess that's go ahead.
Yeah, so that's more on the monetary side. On the fiscal side, the government, because you are faced with high levels of unemployment rate, obviously they have to come up with policies to sort of cushion the low-income households. You have lost jobs, and they had to push for policies that would sort of social policies that would try to cushion them. But they're also doing it at a point when they can't actually afford it, because there's declining revenues are flowing into the fiscus, and they have to deal with all these problems. And for that reason, we're accumulating huge amounts of debts, or huge amounts of deficits, which were being monetized via the central bank. So it was now everything that we were doing was just pushing inflation further and further up.
I think that's later stage of inflation, close to the right before the dollarization, I guess.
Very true. That was now at a point just before dollarization. And you would also, something interesting, you spoke about the stock market. So something happened, I think around November 2008. The central bank shut down the stock market. And the reason why they shut down the stock market is, yes, they shut down the stock. It was closed down, the stock exchange, the stock market. So there were no trades around from November 2008. I think we only resumed trade sometime in 2009 after dollarization. The reason why they closed the stock market is, so if you had Zimbabwean dollars, you have earned your Zimbabwean dollars, you couldn't almost invest in anything. You couldn't buy property. You had to first perhaps convert your Zimbabwean dollars into US dollars first if you wanted to invest in something like property. And to do that, just to give you an idea, I said $1 you needed about 1 quadrillion Zimbabwean dollars to buy $1. So, and there wasn't enough foreign currency on the market anyway. So anyone who had excess liquidity, the only thing that you could actually invest in were you could actually buy shares on the Zimbabwe Stock Exchange. So all the excess liquidity was being pushed into the stock market. So there was, the stock prices were just shooting through the roof. Prices were going up. on an hourly basis. I mean, at every trade, the prices would just go up. You couldn't sort of come up with an exact. I think beyond June 2008, you couldn't estimate inflation correctly in Zim. So the official inflation, you couldn't do it because the actual basket of goods they used to estimate inflation was no longer available. So there were food shortages. We didn't have food in the stores, and we didn't have certain items. So it became almost impossible to estimate inflation officially using their basket of commodities. We were now relying more on the exchange rate to have an idea of where inflation was. And I think that was the only thing we could actually use to estimate where inflation was. It was now the exchange rate. So because all the excess liquidity was being pushed into the stock market, you could actually buy shares with your Zimbabwean dollars, which was almost worthless. The stock prices kept on going up and up. And then the central bank governor then, who was Gideon Gono, thought the stock market was driving inflation. That's the crazy part of it.
Which is not true.
The stock market was just responding to the excess liquidity. So he decided to close down the stock market. So I think around November 2008, they shut down the stock exchange and we stopped trading shares, but it just didn't help anything. And I think that then sort of paved the way to dollarization. So we had reached a point where the Zimbabwean dollar became worthless because you couldn't do anything with the Zimbabwean dollar. You couldn't buy shares, you couldn't do anything. At that point, I think towards the end of 2008, people just started rejecting the currency. They just stopped transacting in Zimbabwean dollars. People started demanding US dollars for basic services, even to just visit your doctor or your GP. They started to demand US dollars. So it became almost impossible to use the Zimbabwean dollar anywhere else. When we shut down the stock exchange, I think that was the final nail. We just then stopped using the US dollar.
People are accepting US dollars rather than local currency before the so-called announcement of dollarization, I guess.
Oh, yes. So in 2000 and I think sometime in 2008, I read Steve Hank's paper From Hyperinflation to Growth, where he was talking about Zimbabwe. And at that point, he argued that the only way out for Zimbabwe is to actually dollarize the economy. At that point, our hyperinflation had reached the same levels, and we couldn't sort of now rely on your typical monetary tools, your interest rates, and money supply to correct things. So he argued that at this point, the only thing that they can do is to actually dollarize the country or have a current spot. And as an analyst, I was really excited after reading that paper, and I went to our investment committee meeting, and I used to present every Monday. And as I was presenting my findings, I think it was largely from Steve Hank, what he had argued. And I said, we have to dollarize the economy. And everyone looked at me and said, it's not possible. How do we dollarize the economy? Where will the US dollars come from? People could not see it. I was excited, and they said, no, young man, you must have lost your mind. It's not possible to dollarize the economy. But by November 2008, like what you said, it was almost a US dollar economy. It became true. Because when we closed the stock exchange, there was no longer use for the Zimbabwean dollar. And people were now rejecting it. We didn't know what the inflation numbers were. I think daily inflation was in millions, was in excess of millions. Daily inflation. If you could run, just trying to run it on your Excel, just trying to project it, was something very much sharp rise, very much exponential. It was not making sense anymore. So we reached a point where the Zim dollar was just worthless, and no one was no longer talking about it. And at that point, all sorts of providers started demanding US dollars. Even boarding schools started demanding US dollars. If you wanted to keep your kid in boarding school, you had to pay in US dollars. So it was quite evident that the direction itself was now dollarization. Official dollarization only happened around March 2009. It wasn't, the policy itself was just to acknowledge what had already happened in the market. The market had dollarized itself. So with a worthless Zimbabwean dollar, the participants just decided to use US dollars on their own. The government resisted dollarization to begin with. Their first budget for 2009 was actually issued in Zimbabwean dollars. And they then had to issue a new budget, revise the budget in US dollars. So the government from their end, it was just acknowledgement. They didn't dollarize the economy. The people dollarized the Zimbabwean economy.
And the government has to.
They had no option but to accept that it was now a US dollar economy. They had no option. They merely accepted it. So credit must actually go to the Zimbabweans because they dollarized the economy on their own.
One more thing I was really curious, maybe this is different from Japan, the labor. I heard lots of people going to the neighboring country, in particular South Africa, because Zimbabwe has a lot of, the neighboring countries, like Mozambique, whatever. My question is, how was the impact on those overall laborers? Are they migrating to, for example, South Africa?
Yes. So if you check the history of Zimbabwe, there was always a bit of labor migration to South Africa, even during UDI or during the time when Zim was still colonized or was still Rhodesia. So before 1980, before independence, there is a history of Zimbabweans migrating to South Africa to find jobs to work in the mines. But what was quite, I think, unusual was the number of Zimbabweans leaving the country around 2000, post 2000. I think we spoke about what was happening in the various industries, your mining, your agriculture, your manufacturing. So we were literally witnessing a destruction of all those industries. So we lost jobs. Most jobs were lost during that time. Mining companies were shutting down or going under care and maintenance. So they didn't need employees. And agriculture, the large commercial farmers were no longer there. And the people who replaced them could actually not farm and could not do agriculture and could not employ anyone. So jobs were lost right across. So that then sort of fueled an increase in outward migration. Young Zimbabweans leaving the country soon after graduating, they will just leave the country. Traditionally, so post 2000, I think the destinations were South Africa, most neighboring countries, Botswana, because these countries have sort of stable economies, stable monetary regime, stable economies. Namibia and a big number would also migrate into the United Kingdom. And that's really because of the historical connection that Zimbabwe is actually is a former British colony and is English speaking. And the education was more or less also shaped around the British system. We used to write Cambridge at ordinary level and at advanced level. So the education and University of Zimbabwe used to be a division, used to be part of College of London, something like that. It used to be University of Rhodesia and part of College of London, something like that. So the education system was sort of shaped by the British system and throughout Rhodesia and into the 2000s. And because of that reason, I think Zimbabweans could actually work in foreign countries, and their qualifications were widely accepted in countries like the United Kingdom and other English-speaking countries. But I think most of them did migrate to the UK. And up to today, we still have a lot of Zimbabweans. We haven't fully recovered from the effects. And the sad reality is there was a bit of recovery during the GNU, that's between 2009 and 2018 and 14. And then we sort of have started regressing again. So there's still large numbers of Zimbabweans leaving the country to work in the neighboring countries. But the good thing to come out of that is your remittances. So if you check, Zimbabwe is receiving plus or minus 2 billion per year. That's a large number. Yes, 2 billion US dollars comes from remittances. These are Zimbabweans living in the diaspora. And that number is bigger than what Zimbabwe gets in terms of FDIs. So foreign direct investments into Zim are actually lower than the remittances we receive from Zimbabweans living abroad. And that has actually sustained a lot of Zimbabweans back home. And if you look at our remittances, perhaps as a percentage of our GDP, it's perhaps one of the highest in sub-Saharan Africa.
Oh, wow.
because you're looking at a very small economy that's getting $2 billion from remittances each year. So that's as a result of the outward migration.
Wow, that reminds me the old days of Philippines. Wow.
Yes.
So the kind of remittance, I think, I know that you are kind of highly educated. So those qualified people can, migrate to UK or whatever, the kind of to with a skill. But what about those unskilled labor, for example, like a mining? Those are also moving to the neighboring countries like South Africa, Botswana.
Yes. So the highly qualified individuals do migrate out. Most of them do migrate. There's been actually what we call a brain drain, the term that they use. So we have lost those, highly qualified engineers, people in the medical field, your doctors, people in finance jobs. They have been migrating out and working in these countries. The lower end has also seen a lot of migration. They migrate into the regional countries mainly, and sometimes it's actually illegal in that they will be undocumented, and they usually go to South Africa and then other neighboring countries as well. That's your Namibia and Botswana. They work in the farms there, in the mines as well. Yes. They do provide labor in these countries. It makes also economic sense for whoever is employing them because they don't have bargaining power. So if you look at a country like South Africa, South Africa is it has highly unionized labor force. And once in a while you will have some labor strike. They're not showing up for work and demanding higher salaries, cost of living adjustments. And if you're employing immigrants, you don't have to deal with that.
Oh,
you're employing undocumented immigrants. Yeah, they're willing to. They're highly agreeable when it comes to salary. They just take whatever salary has been offered, and they work in these farms. So in the Western Cape, they pick fruits, work in these fruit production companies, farms. And they provide labor. They pick fruits, sorting of fruits, and all sorts of things. And they do that right across. And they also take sort of lower end jobs like you're cleaning domestic workers, gardeners, and all sorts of things, and working in restaurants. So they do get employed, and the employers are paying less as compared to
the union
South African or unionized labor. So they do get absorbed in these regions. There is a big number of Zimbabweans working in the regional countries.
Wow.
Within the SADC region.
They're still there. They are not coming back to Zimbabwe.
No, they have still been. That trend didn't. So that trend hasn't stopped. They're still migrating out. Any young Zimbabwean, their most important goal is to actually leave the country soon after university or college. And the privileged Zimbabweans, they just send their kids to universities abroad, hoping that after completing their studies, they just stay there and find jobs. And most Zimbabweans who go to universities abroad, they never return. They never come back after graduation.
Is the population-wise, it's not that drastic, I guess. Maybe I think somewhere around 14 million something for the
15 million. Yes, I think the last census, which I don't remember the exact date, it was around 15 million. We should be around plus or minus 16 million. We haven't been growing that much in terms of population growth, obviously because of that factor that quite a number of Zimbabweans are actually leaving the country.
I see, but not that drastic. But it's not. But on the other hand, there's not.
Yeah, no, we haven't. We have been growing, but obviously at a slower pace than we would have been. It's still a young country, a young economy, and would have been perhaps growing by bigger slightly bigger numbers.
I guess demographic-wise, I think it's a young country. I guess
it is a young country
compared to our standard,
just like most sub-Saharan African countries.
Yeah, I see. Wow, I think I covered all the questions I prepared. Most of the questions, also fulfill my curiosity, and then I think that was really for my learning purposes. I think it's quite helpful. Yeah. And then also,
very helpful, Hashi. I think it's a topic that we will need to keep on talking about. There is quite a number of things. Obviously, in one session, we just touched briefly on what was happening in the different areas, the motives, and but there is so much to talk about when it comes to hyperinflation in Zim. It's like, a very long story that we're just trying to reduce into a movie or into a discussion, into 2 hour, 1 hour discussion. Yeah, there's so much to talk about.
I think I think two things I still have in mind is one is the let me go one by one. So what's the current status? So you mentioned before that the people get used to it, so it's not as drastic as 15 years ago.
Yes. When compared to 2007, 2008, which were our worst years, I think we have sort of recovered from that. But when you compare Zim to two things, Zim in the 1990s and its potential, I think we still have a lot more problems. So at this present day, we still have hyperinflation in Zimbabwe. What's different from 2008, 2009 is the economy is largely dollarized. The local currency accounts for plus or minus 20% of domestic transactions, and 80% is actually in the United States. 80% is actually in the United States dollars. So we still use the US dollar. So we're largely a dollarized economy, but we do have a local currency, which they have just sort of changed recently. They've introduced a new currency called ZiG, which is Zimbabwean gold, and they're replacing the Zimbabwean dollar, which was in existence, I think from around 2016. I think we were dollarized between 2009 and 2015. And then since then, they've introduced the bond note, which is an RTG sort of local currency. And that local currency is what they are now replacing with ZiG, Zimbabwean dollar. And that's as recent as this April. We now have a new currency. So we still have the same problems. We still have the same policies that led us to hyperinflation. What has been the saving grace is the US dollar in the memory. So the market went through hyperinflation, and we will not get to $100 trillion knot. People will just transact in the US dollar, no matter what the government will do. So I think that's what has sort of kept the economy going. And significant inflows, we still have significant inflows coming from export in the mining industry. Despite the bad policies, we still have a lot of mining that's going on in Zim. And I think recently we've been affected by the softening in metal prices right across the world on the global markets. But we still have significant inflows coming from mining. And I think all in, I think you're looking at plus or minus, it's a very small economy. We're looking at plus or minus 12 billion that's coming into the economy from mining, as well as your remittance and FDIs. So we still, we have problems. We still have the same problems, but we are not at a better, we have a more thriving economy than the hyperinflationary one. Food is available in the market, in the stores. There's food in the stores. The prices in US dollars are quite stable. So it is a far much better economy compared to 2008, but a far cry when compared to Zim's potential. We're looking at a country that has so much potential. You're looking at a country that has a fairly trained and educated labor force. So that's why most of them just end up going into the region. A country that had significant infrastructure development, like the road network and rail, were quite advanced, and that has just crumbled and due to neglect. So when you look at the potential, I think we are a far cry from where we should be.
Quite understandable and appealing as well. And also I think the legal system and those education kind of software type of the infrastructure is also, I guess that's not bad, I think.
You can still work with it, but it's not the best at the moment. And we're also lagging behind our regional peers. So if you look at regional countries like Namibia and Botswana, Zambia and South Africa, I think we are now far behind when compared to our regional peers. Yet we used to be a leading country in the region, not just Southern Africa, but Sub-Saharan Africa.
I see. That's a reality. Wow. Interesting. Oh, the last question. Last question is advice to Japan.
All right, interesting. Very interesting. Obviously, I don't think Japan will end up
totally different country.
like Zimbabwe. I mean, one thing that I must highlight is it's very difficult to end up in hyperinflation. You have to do all the wrong things to end up with hyperinflation. But I must say, inflation is a reality, I think, right across the world. A lot of the things I spoke about, the interesting thing about Zimbabwe is Zim is an extreme case. So if you were to shock your model, I think Zim is your sort of worst case scenario, is the most extreme form that it can be. For the rest of the world, obviously, the things we discussed are quite key. Inflation is a bad thing and has very significant effects. On the economy, on savings. One thing that has happened to Zim, I think, which people must draw from is Zim has a negative savings, and because of hyperinflation, savings are just one thing that we never think about. Because of hyperinflation, we destroyed key industries, like the financial services. We destroyed products. Zimbabweans no longer serve for pension and retirement. That industry is now very tiny because of hyperinflation. It does destroy certain industries. It has affected savings. And without savings, it's very difficult to have investment, because in economics, they say savings is equal to investment, or investment is equal to savings. So that has actually affected us in many ways. For the rest of the world, I think there are repercussions for what happens when we lack discipline on the fiscal side, and they also repercussions for printing money. And it's not something that should happen, that I would wish on anyone, and it's not something that should happen to any country.
Yeah,
it does destroy an economy, and it's bad for everyone. And we are worse off at the end of the day. So it's very important to keep the discipline that's required to have a normal economy.
Agreed.
One of the things is we should have discipline on the fiscal side, what we're spending on. Certainly, I think of late, most Western governments are just piling up huge amounts of debt, from the US to Japan and to China. There is a lot of debt buildup that's happening, and they are living way beyond their means. And at some point, that will lead to inflation. A lot of inflation. We're already seeing it. I think most economies right now are grappling with inflation, and that's coming back from activities as far as COVID. During COVID, what governments did, and we're now paying the price. Now, at first, we were told it's transitory, but the transitory has become a real problem for everyone. And the reasons are to do with the excessive money supply growth that happened during COVID. These governments were printing money to cushion their people, support industries, and there has to be an effect for things like that.
Yeah, it has to pay the cost. I think the US
has to pay that cost.
Yeah, raise the interest rate, and they have to combat the inflation.
Yeah.
Inflation.
Yes. Interest rates are excessively high at the moment, and the reason is because central banks are struggling to tame inflation right across the world.
Yeah. Not only the one, not only Federal Reserve, but also the other central banks as well. Oh, by the way, for the debt to GDP, I think both Japan and China may exceed the 200% of the GDP amount of the debt, but the Japanese government debt oriented. Chinese the more for the private sector debt driven. So both are the historically we experienced in the late 90s. Experienced the real estate bubble. China is, I think, is experienced now. but I think we know that the government that is slightly different. So that's why only China is experiencing deflation now. It's quite the characteristic.
And I heard that Japan, for the first time, in a very long time, has sort of increased interest rates to zero. Is it zero? After a very long time.
Yeah.
I'm not so sure about that.
Yeah, a slight, and then I think they continue to increase slightly, not like a 5%, not 1%, but it's a 0.25.
Very negligible.
I think
so perhaps maybe we should celebrate the direction. It's a good direction if they are raising interest rates a bit. Considering that how has been inflation in Japan? My understanding is this.
I think it's quite makes sense. The corporate governance is quite that's getting normalized. The corporate's increasing profit, and then the people are changing jobs. That's inevitable for the people to asking for the higher wages. So I think it's sooner or later they will get the higher wage, higher price. That means higher inflation. I think that hits the pensioners, and government has to tackle somehow. But I think it's this inflation continues, and then central bank cannot raise the interest rate that dramatically because of the huge debt in BOJ's Bank of Japan's balance sheet. So they can't, but they have to. But that's why doing gradually. So that I think it's still workable by fueling money into the banking sector. Banking sector also still has a deposit in the central bank, so they are making losses or zero, but now making interest earnings, which I think is a significant. So in short, I think inflation is just started. It's going to continue, but I think the economy, I think it's healthier than I thought.
Okay, interesting. Actually, very interesting insights there.
Anyway, that was really interesting topics. I think this is quite appealing, and then for lots of my community like a CFA or the those interested in macroeconomies. So let me share after ready for the making videos, whatever. Of course, that I will share with you beforehand. But thanks
so much, Ashley. Looking forward to that. Let's see what will come out of this.
Yes, thanks for that. And then I really appreciate it. Thanks for the time and insights. Bye.
Thank you.
Bye.